Todd?
Yes. Okay. I think I understand what Tom is asking now. It's kind of a time question on the chart that you have right here. It looks his question is that from the basically the close of the market on the right exactly
Yeah, I'm gonna clear this off. Basically, from I think you're talking about
from here
here to
exactly
here. Okay.
exactly the ADX is moving down, but it's a pretty nice downtrend. Is this question?
Yes. Okay. And the reason why that's happening is you got to remember the ADX goes ahead, and what happened was it was trending up here, and it was an up move. So when an ADX, it's the same thing here. Here the ADX did finally start to catch up back down in this area here. But then as soon as the market started going up, it goes down. So because as we're going up, let me get some white space on here to explain that some more. Okay. So we've got price action going up. And at first the ADX is kind of flat. And then it realizes, oh, this is a strong trend. Okay. So it goes ahead and starts going up with it. Well, so it's demonstrating to you once through its math, it's verifying, okay, this is in fact a strong trend going up. It's going to rise with it. Well, guess what though? If up is the strong trend, then what would be the downtrend, or what would be a weak trend? Downtrend would be the weak trend at first. So what happens is as the market starts to go down, initially the ADX is going to go down too, saying, well, wait a minute, the uptrend is the strong trend, not the not the downtrend. So it goes ahead and the ADX rises with it until such time as price starts to pull back. Now, if price continues to go down, once the math and the formulas catch up, then what will happen is the ADX will say, oh, looks like this is not a short-term pullback. This is a new long-term trend. So this trend now is to the upside, or is strong. I'm sorry. This is the ADX, remember. This is ADX. This is price. So and that's basically what happened in that example is that the ADX, after the X number of bars go by and the math catches up with it that makes up the ADX indicator, it recognizes, gosh, this was not just a pullback, this is actually the real deal. And so the ADX starts to go ahead and rise when the price is falling because say now, okay, price action is actually stronger to the downside. Okay, so if we look at that again, you'll see what I'm referring to, which is the dominant trend was the uptrend, so it was rising. But as soon as we start to roll over and go down for a while there, that is not considered the dominant trend. It's more or less considered a pullback, okay? And then we traded sideways, so the ADX just basically flattened out because there was no trend at that point, okay? Then the ADX went ahead after we traded sideways and slightly down, sideways, slightly down, finally caught on, okay? And that's this was sloppy, to say the least, but this is overnight trade. If you would have had volume and more conviction in the bars, you would have gone ahead and had this move quicker and be more sensitive. The ADX is more sensitive in regular trading hours than it is in overnight trading hours, hence why you see on my my trading charts that I have the regular trading hours screen ADX on my regular trading hours chart because then it's more sensitive. It takes out all the stuff that wasn't there in overnight trading that was more sloppy and just focuses on actual trading activity. Okay, Todd?
That was great. And I want to just point out or ask you. I don't remember if it was today or yesterday, but you did mention to the students when the ADX begins to roll over, that's actually not a bad place for a little short contrarian play.
That is absolutely correct. And what we're referring to there is, let me go back to the other chart. During the initial rollover, there actually can be, so this is regular trading hours, when the chart goes ahead and initially rolls, makes the rollover, is sometimes where you can find if you're a scalper in particular. So if you got yourself, you got a 15-minute chart where the ADX is starting to roll over, Yeah, and this was the 15-minute chart. So this is for your 1-minute, 5-minute traders. If you've gone ahead and had a chart where the ADX has been rising and all of a sudden it starts to roll over, there could be some great 1-minute, 5-minute type scalp shorts in this type trade. Okay, so where we initially get the rollover after a strong trend and you get them at that initial crest is where you can find some great counter trend trades, especially if you're scalping for a point or so. What you got to be careful of, though, is, of course, as we talked about, the trend resuming to the upside. So that's why, here we had the trend going up. There was some great short-side trades for a couple of points, but you want to be quick and you want to be nimble on those type trades. Let's take a look at the ADX real quick while we're at it on an intraday basis. I'm sorry, on a 1-minute and 5-minute type chart basis. Here's a 5-minute chart. Okay, so you see on the 5-minute chart, we actually had a good trade in here and a good trade in here. All right. In overnight trade, it was, in my opinion, kind of mixed reviews. It did seem to pick up the trends in overnight trade as we break it down. But here, this part was kind of sloppy. Again, that 2 a.m., that no trade zone time got kind of sloppy here. It was actually flat as it was first in there. So in the other hours, in the 3:30, 3:15 Central Time to midnight zone, the time Tom was asking about earlier, you see actually it did go ahead and get a rising trend into it, so there was a trading opportunity there. Okay, but then you see there was also a chop too, because on a 5-minute chart, when the market's trading trendlessly, it can give you a lot of whipsaws back and forth. On a 1-minute chart, it's going to be similar. The 1-minute chart kind of concerns me. 5-minute chart's not so bad. 1-minute chart kind of concerns me because you get more of these sharp moves, because you get more sharp moves at a 1-minute chart back and forth as you get quick pullbacks or quick rallies, and so you get these spikes sometimes in the ADX. So I kind of like the ADX a little bit more smooth out on a 15-minute chart, but going down to the 5-minute chart has my endorsement, my blessing. As I mentioned, I think in yesterday's webinar, I will occasionally, especially if I'm looking to go and scalp, I will bring it down to a 5-minute chart. But I intentionally, consciously make that decision because I don't take a trade knowingly and intentionally on a day in and day out basis for scalping purposes. I'm not looking for 1 tick or 2 ticks normally. I'm looking for more than 1 tick, more than 1 point. So my charts are geared towards 15 minutes or higher, and then I force myself to bring them down to 5-minute charts if I'm looking to go ahead and be a scalper. But here again, you see there are opportunities with the chart, but the ADX is going to be way more wavy, and that's why I don't like the ADX so much on the 1-minute chart. Okay, just so you understand, I'm not advocating no ADX on a 1-minute chart. 5-minute chart though. It's a little bit more smoother, and you can get some fairly decent signals off of it. Okay, Todd?
Yes, Joe has another follow-up question. For overnight traders, could there be a setting that be used for the ADX to improve the reading?
The short answer would be yes. What you could do, now keep in mind, because of the style of trading I'm looking for, and I'm looking at 15-minute charts and my trading, I want the ADX to be a little more sensitive. So Joe, you see how I have the setting over here, 3 and 18? What you can do instead of 3 and 18, why don't you go ahead and try an overnight chart and make that by like 14 by 14 and go ahead and try that out for yourself and see how that works for you. That desensitizes the ADX quite a bit. Okay, so that might be something you could use. Instead of it going and being like this, it's going to be more like, that. It's going to be much more smoothed out if you change this to a 14 by 14. So there you go, Todd.
Okay, that seems to be it for ADX follow-up questions, unless you had something else you wanted to expand on that.
Um, Let me just give it just a moment's thought. The ADX is a great indicator, and like I said, to keep people on the right side of the trend, I think it can be very useful. I did talk about the 5-minute chart, turn up the microscope a little bit. Talked about the positive DMIs, the negative DMIs. Um, there is one thing I do want to go ahead and share still on the ADX. I'm going to do that actually for my other chart though. Let's see here. Okay. One of the things I want to point out here is for those of you that have attended some of my other webinars, you know that one of the tools I use for trading is my fish hooks. And I would like to go ahead and point out that the ADX indicator can give great fish hooks too. Okay. Excuse me. So what I'd like to point out to you is, for instance, let's go ahead and the problem is, again, these are kind of off-centered to each other. Let's see if I can, because this is the daily one only. This is the intraday. So let's just go see if we can find examples on the intraday chart here. You see here over and over again that there's going to be these little hooks in here. Okay. What I just want to go ahead and point out to you, the reason why I didn't share these with the other groups is because they're not as reliable. I want to make that clear. The ADX fish hooks are not as reliable. However, they are a confirming indicator when you get the ADX fish hooks along with the RSI fish hooks and then the price action fish hooks. Okay, so what I'd like for you to do now, fish hooks on the longer time frames, like for instance, I was just sharing with Joe there, you get a fish hook on like a 14 by a 14 chart, that could be far more reliable for you. In fact, you know what? Let's just do something real quick. I don't think anybody's going to mind me going and taking a little bit of time here. I mean, I notice we're already almost at the 2 hours today. Is there anybody who's objecting? Let me put it this way. Is everybody okay with me going, keep going at this webinar and just talking for a while today? Would everybody raise their hand real quick? Are we good, Todd? Or nobody minds me keeping on going?
Yeah, it looks like most people want you to keep on going for right now.
Okay. So let me go ahead and I just want to show the setting that we were talking about with like the ADX. So here's the two settings, length and smoothing. So, you can change this to 14 by 14. Now, when you get your fish hooks, they're going to go ahead and generally be a little bit more reliable, okay? So experiment with that. But I do go ahead and now remember, this is the 24-hour chart. So let me go ahead and change the time. Here we go. So as you recall, I like to go ahead and, these fish hooks here in the middle of the trading day can be very helpful to you. And, they usually signal, especially as a scalper, a couple point move in the direction of the fish hook afterwards. And so I would encourage everybody to go ahead and play with those and see if adding those to your RSIs has gone ahead, or could go ahead and into your RSI and your price action fish hooks will go ahead and help you. Because for me, it's gone ahead at times and been a confirming indicator as I'm looking at, do I want to go ahead and take a trade, especially when it's done on a little higher time frame. So I kind of wanted to put that out there. It's the least useful tool that I use the ADX for, but I wanted to kind of share something with these guys that I do use that I didn't share with everybody else. So Todd, it would be the the ADX, because you'll see as you go and look at some of these when you get the fish hooks, and remember now the ADX as you're looking for instance right here. Here's an example. Let me go ahead and get the highlighter. Here you got a price fish hook. And you got the fish hook right here. Now remember, the fish hook actually, when the ADX negative is going up, that means you want price going down. So here you had the ADX rising, it pulled back, and then it went ahead and continued going and rising again. So it was the same thing here. You had the fish hook, and so it's kind of the same thing. What you're looking for is if you can get the fish hook on the ADX to go ahead and agree with the price action. I will say this: if you do not get the ADX to agree, but if the price action fishhook is in place, especially if the price action and the RSI fishhook are in place, but the ADX one isn't, just disregard the ADX. But if you get the price action or fishhook and the RSI fishhook and the ADX fishhook to all agree, that is your highest probability type trade. So that's how I use it. I use it as a supporting indicator, kind of like the VWAP earlier. I don't take the trade based off the VWAP only on the 1 minute chart, but if the VWAP on the 1 minute chart agrees with my other support resistance levels, I will go ahead and take it. So if you set your charts up kind of like mine, which I know some of you have, where you've gone ahead and put the ADX right on the master trading screen here. If you see the fish hook happen at the same time you get the RSI happen and everything else, that's a higher probability trade for you. So keep that in mind. All right, Todd, that's kind of what I wanted to share there. I want to give one extra little bonus in there.
Yeah, well, actually, given several bonuses. I'm very happy for the students on that. I think this is actually a really good time to go ahead and take a little quick break. And Robert, you can get a drink of water for your throat, and everybody can go to the restroom or whatnot. And then we can probably start in with our the next section, which is the setups, entries, exits, trailings, stops, that type of thing.
Okay.
Unless you have any.
Okay, let's take just about a quick 4-minute break here if we can, just a quick bio break and get some water. Start back up about 4:05 Eastern time, and we'll get right back into it. Okay, everybody? So we'll see you in just a moment here. Okay, let's go ahead and get started back up here. Todd, I'm ready when you are, sir.
Okay, so just to remind everybody, we're going to start our next section, and this is more of the for setups, entries, exits, stops, stealing, and that kind of stuff. We have about 6 or 7 email questions, so we'll go through those first, and then when we get done with those, you guys can start hitting us with any other questions you may have pertaining to these topics. First question is in regards to fish hooks, how do you determine your exact entry point after the hook has completely formed or while it's still forming?
The short answer to that is after the fish hook is formed. We go on ahead and I've shown time and time again how dangerous it can go ahead and be to, I should say we've seen time and time again, live and in the chat room. Todd, I think you can go ahead and, this was actually a topic of conversation yesterday. I think it's a good topic. How many times where something can look like it's going to be a fish hook, for instance, maybe right here, let me get a little drawing in here. In the middle of the bar, all of a sudden it looks like it's going to make the fish hook here, and then all of a sudden by the end of the bar it closes up, or it closes too steeply so it doesn't make the fish hook. So because you got to get the right, as we've talked about, you got to get the right fish hook angle. It can't go ahead and be this super angled stuff, to sharp angle and so on and so forth. We've kind of talked about that a lot in the other webinars, but just keep in mind that the key is wait till it closes, because Todd, as you see in live and in the channel, people start calling out fish hooks beforehand, which is great. It's exactly what I want you guys to do. Possible fish hook. Do that in that private channel that we have so that everybody can get tuned up for that, so everybody can start looking for that in case it's a good trading opportunity, so that everybody in our private group can make money. That's great. But go ahead and just understand that if you execute on it before the bar actually locks in, you're setting yourself up for potential failure, that it won't actually follow through at the fish hook and make the fish hook. So definitely the close of the bar is the right way to go. Todd?
All right. Another follow-up with the fish hook. How do you determine the exit? Do you have a target, or do you wait for a certain change in the price action?
Okay, now we need to go ahead and bring us back then to normal trading here, or just any trade. It doesn't matter if it's a fish hook. any entry you take on any of your trades, you should go ahead and be thinking about, where are you going with this trade? And as you talked about extensively yesterday, in particular, I know I really hit that topic hard, I believe, yesterday, which was looking for the next level, looking for the next level above you, where you should go ahead and be taking off 50%. And we talked about moving your stops up. So what I would say to you for the purpose of this question here, what should your target be for the profit? You've got a couple of things you got to ask yourself. If this is a 1 or a 5-minute chart, then you may only be looking for 2 to 6 tick type profit. However, if this is a fish hook on a 15-minute chart, this could easily be worth potentially 2 or more points. So what you need to go ahead and do is understand that, what time frame are you trading off of, first of all, and then also, be asking yourself, where is my next, resistance level above me? Or if you're short, where is my next, support level below me? Because ideally, you're trading, your target trading for your next support or resistance level. That's in an ideal world what you're striving for. If you're only trading specifically, strictly off the fish hook for a 1-bar trade, then you go ahead and start saying, okay, maybe I want to turn this microscope up a little bit and narrow down my focus on how long I want to be in this. If you're looking for just a 1-bar trade, it's not part of a trend, it's not part of a continuation. Remember, generally, fish hooks as a rule are part of continuation patterns. That's what they are. They're a pullback within the trend, almost such as this is on a macro level. This is up, pullback, continuation. Okay, this whole thing here is a macro fish hook. All right, just so you kind of understand that. So it's the same concept, and that's the same thing, whether that's on a 1-minute chart or hourly chart, but how long you're going to stay in it afterwards is going to be dependent on the time frame you're changing, or you're trading for, and what your trading targets are. So it's very subjective, and that's what I'm trying to convey here. What I will say is this, though. Let me go ahead and pull up an hourly chart real quick. Look at how nicely you get some of these fish hooks in there. Okay, this is the bent finger. And I can go back in here. We can find fish hook after fish hook, but the bent finger and so on and so forth. Point being is that it works just as well on an hourly chart. So it kind of depends what time frame you're trading, because you're really looking for the next bar then to have a certain distance assigned to it. And what I mean by that is you're going to be trading in this case to the next support level. Or you're going to be going ahead and trading to a certain point level. I advocate, as I did yesterday, trying to get into trades where I'm looking at trading to the next support or resistance level, versus just the next, versus 2 ticks or 4 ticks, because that's not really my style. That's not really, I'm not looking just for that quick scalp, unless I'm trading off a 1-minute or 5-minute tick chart, or sorry, 1 or 5-minute fish hook. But which I usually don't do. 1-minute fish hooks I don't actually trade off of at all. I don't trade very, really 1 minute as we talked about. 5-minute fish hook though, yeah, that would be a quick scalp type trade. So understand that your target is either based on points or ticks based on what time frame you're trading, or it's going to be based on where's the next support or resistance level above or below you, as I mentioned, at length yesterday. Todd?
Okay, looks like another fish hook related question. This is a good one. When a fish hook is not confirmed by the RSI, I'm assuming they see the fish hook in price action, how do you decide if it's still a viable trade or not? And this might be, I guess, a quality of trade issue versus a complete lack of confirmation.
Sure. Well, yeah, and that's just it. The RSI is really a confirming. It's really a feel-good, not a necessity. So you can definitely take the RSI, or you can take the fish hook without RSI confirmation. I certainly do take fish hooks without RSI confirmation. What will help determine the quality of the fish hook in the absence of the RSI agreement will be your other indicators that we look for, on my little cockpit here. Remember what we talked about. You could see, do you have an agreement out of the ADX? You can go ahead and see, do you have the right trend? Are you in fact going ahead on the right side of the trend, which is really something you should be doing anyways, but something it's a good point for us to bring this back out again. So for instance, right here, there was a fish hook right in here as I recall. In fact, let's go ahead and verify that real quick. Yeah, it was the bent finger right here, the bent finger trade. So one of the things you want to do then, if you don't have agreement out of your other indicators, which actually in this case you did actually have the bent finger on the RSI too, but what let's just pretend that we didn't, so let's squash that down. Then you want to go ahead and look, okay, am I on the right side of this trade? Is my 20-period moving average rising? So in other words, is the trend up and that this is just a pullback from within the trend? The other thing you want to look at is, did the price action fish hook or bent finger stop at one of my speed lines? Okay, because usually if the trend is so strong that the market only pulls back to your speed line, that's a good thing. That shows a pretty strong trend, as I mentioned a lot yesterday. So go ahead and keep that in mind. Are you on the right side of the overall trade? And are you only pulling back to an area that's so strong that even the shortest term, averages are barely able to keep up with it? So those are some things you can look at to determine better quality if you don't get RSI agreement. Todd?